What's going on, everybody? It's Brandon here again, and in this video, this is the part 2 of the 6-part series on new builds. Last video we shared the 3 upsides of buying a new build, and in this video I'm going to share 3 downsides to buying a new build. So number 1 is the lower land value. What does that mean? In a property, there's a government valuation. Usually there are 2 values. You might have heard of this in the previous video. One is the land value, which is the land you own. And then number 2 is the improvement value, or the building on the property. You're likely to receive a lower capital gains on a new build compared to an existing property because there is lower land value. Majority of its value is in the improvement, which is the building itself. Higher percentage in the improvement value and a lower percentage in the land value. With an existing property, it's usually the opposite. So the higher capital gains property are the properties that have bigger land. As many have seen, recent properties that have been selling double or even triple their CV are properties with development potential for multiple dwellings that are usually on flat, full sections. On a new build, you have to pay a premium on the actual building, which over time usually depreciates opposed to appreciate like the land does. Second downside to a new build is it has little to no potential for you to add value. New builds are often built to maximize the land usage and the building coverage that the council allows. Now, in some cases, you might find some developers building 2-story houses even though the zoning might allow 4. This is because they're optimizing between the cost to build and the actual sale price of those new builds. Building costs per meter usually goes up when you build higher and jumps up significantly higher if you build 4 stories or more because the engineering changes dramatically. Sometimes they might not maximize the land is because simply that area might not be ready for high density housing just yet because the land supply is still quite high. In short, developers are building to maximize their profit and maximizing the land usage. So it often leaves very little room for a buyer to add value. Now, compared to buying an existing home, there is often an opportunity to buy them as a discount because there are room for improvement. By doing the work, you can often build insignificantly through improvements that you might make to the property. Renovations is a very well-known property mentor group in Auckland who are known to buy 2-bedroom units and add a 3rd bedroom for higher yield and higher capital value. Matt Gilligan from GRA teach people how to add value through development and subdivision potentials. Now, it might sound daunting for a newer investor to actually go out and do the renovations, do the subdivision. However, all things can be outsourced, and if it comes at a cost, you can factor those costs in when you actually buy the property. It all comes down to learning more, because the more you learn, the more you earn. Now, last but not least, opportunity cost. With anything, unless you have a comparison, it's very hard to get a good grasp of what you might be missing out on. Now, one of the biggest advantages with new builds, which I like personally as well, is that you can put down a very small deposit, such as 5% of the purchase price, and you wait until the build is complete. If you bought well, you would start getting some capital gains on that property immediately while you wait for it to finish. Now, of course, there's always a risk that it delays for even longer, and there might be clauses for the developer to actually increase the price in the future. So it's very important to do very good due diligence with your lawyer on this and understand what you're signing. And you might just get your deposit back with a slight interest margin on top of it. Yes, this is an advantage with new build, putting the small deposit down and just wait until the build is finished and then you settle the property. During this time, you're getting capital gains. But it's wrong to say that you can't replicate the same thing with an existing property, because experienced investors can often negotiate a longer settlement date, sometimes maybe 6, 12 months or even longer, What that means is they put a small deposit down now and they'll settle the property 6, 12 months, 18 months later. This is especially advantageous in an environment like this if you're buying a land bank. You could be gaining significant value before the settlement and before you have to come up with the rest of the deposit and the financing. You might also get a slightly better cash flow on a new build as well due to the tax deductibility rule, but until you put it on paper and measure the deals side by side, you won't know what you might be missing out on. Now, often when a new investor compare a deal, they can put together a profit and loss quite quickly. Because this is quite easily accessible for a lot of people, what are the rents, what are the rates, what are the insurance fees, so you can very quickly work out what the cash flow might be on a property. But besides that, I find that newer investors might make the mistake on not considering two very important factors. First one being planning out how the financing is going to work so that they can quickly recycle the deposit as soon as possible for the next investment property. Secondly, analyzing the future opportunities on a property. Simply put, a newer investor might only see 1 to 2 options on an existing property, and experienced investor might see 6, 8, 10 options on a particular property, so they'll value that property very differently. These two things, financing and future opportunities, are critical information that you should consider when you look at a property and when you're trying to make a decision on 100, 200K deposit that you're going to be putting down. If this resonates with you and you find that this is something that you need to improve on, then I'm confident our 3 Property Accelerator course is going to be very valuable for you guys. So you can check out that in the link below. Until next time, I'll see you in the next video.